Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, January 7th, 2019. Here's the chart of Netflix, folks. I wanted to show you something on it. Today at InTheMoneyStocks.com, a monster day. We closed out multiple 10% swing trade profits as we nailed this upside move in the markets. The beauty of it is going back to December 24th when we hit the lows, and that was when panic was at, all-time highs. I said to members, we're going to 260 to 262 on the spiders. I can flip over to the spiders right now, show you guys exactly why that target is there. And again, that was called right here, folks, called right here perfectly. This was your target. It's a retrace, what we call the scene of the crime, and that's where we're headed. Now, markets again are up nicely today, although pulling off the highs after the president made a tweet about giving a speech on border security tomorrow night. Needless to say, the market knows it's going to be inflammatory, and then it's pulling back because it worries that it's going to just exacerbate negotiations. Almost always when Trump tweets, it's not, a kumbaya type event, right? Let's be honest. So markets are a little bit nervous about that, but it's not a big pullback as of now. Ultimately, the market's focused in on China and the trade talks. The Fed last week was an awesome thing. And again, folks, the charts are what tell the truth here. So, especially going back to last Thursday when Apple warned, the markets were down sharply on that day, but it was only a 382 Fibonacci retrace of this low to the previous high. And you can see it. So if I zoom in a little bit here, and this is just a little education for y'all, but here was your pivot low, and here was your high on the move, and then here was Apple's pullback day on last Thursday. And it was only a 382 retrace. So, think about how nasty, a warning from the biggest company in the world, essentially, or close to the biggest these days, having to do with China and growth and global growth and all that stuff. And the market's only pulled back 0.382, but if you listen to the media or if you talk to average investors, it was all out panic. It was freaking out. Markets are going to crash and so forth. But if you just looked at the charts, it was simply a 382 retrace inside of the up move, classic bullish case. We stayed long. We went more long, in fact. And then look at the result here. And we took, again, 3 profits today of 10% or more. Options alerts. In the options alerts, I also took a 62% profit on Halliburton, another, I think, about 14% on XLE, just a bunch of nice ones there. And that's in the options alerts if you want options. Research Center has swing trades like the swing trades we took profits on today. And those were beauties as well. So that's where it's at, folks. And again, just a beautiful thing. But markets are going to go right here. This is my projection, at least. We should test about the 260 to 262 target area. Once we get up there, I think the markets will head back down. All right. Now, by the way, no move up is straight up. Especially with the president speaking tomorrow night. I could see tomorrow being a small down move in the markets. But then ultimately, we're all going to be tuned in for China advancement on trade talks. All right, going back to Netflix, what I wanted to show you guys, Netflix into resistance today. First of all, the move up has been amazing. I mean, this is just epic. Look at that move up. But look at this gap fill right here. And look at the high of the day. So my expectation is for Netflix, see this pivot right here, and there's a gap fill right here. This is where Netflix is pulling back to. Right in this range. I would call it at around 297, 298. My guess is you get there within the next 3 to 4 trading days, if not sooner. Could be as early as tomorrow or the next day. But that will be the pullback target. And again, this is just a classic chart. Extended, move up, rip your face off rally, which is great. But notice how it comes right to that gap fill. Major gap fill, essentially erasing the secondary down move right here. Resistance. Starts stalling. It's already stalling and pulling back today. If it pushes up today or in early tomorrow trading and fills the gap right to 320, let's say, it's a dead-on short. It is a dead-on short, folks, but just for a few days, mind you. It's just a quick trade. I still think, as I said, S&P is going to go higher within the next couple weeks. I have a major pivot date for January 21st. January 21st is my major pivot date. There's a huge cycle date coming up for the week of January 21st, which is 2 Mondays from today. So that week, that full week, 21st to the 26th, 25th, somewhere in there, I expect something big to happen. If the markets rally into that, it could be the beginning of the next leg down with some epic-sized daily moves. So just a heads up on that, folks, as well. All right. On that note, I'm going to bid you farewell. But again, more winners here at InTheMoneyStocks.com. Smart money stayed with the charts, only pays attention to the charts because anything else is emotion-based. And that's how we make money here, time after time, day after day, week after week, month after month, and year after year. Come join, take the 7-day free trial to the Research Center, take the options alerts or the chat room. It's up to you. We're here for you. We're here to help you make money in any type of market environment. Take care.